Let's just begin with a simple one. How important is this address later for market participants as far as you're concerned?
It's very important given what we've priced. So content, timeline, and overall approach are things that the markets are going to be looking at very closely.
What's most important out of those three, content, timeline, and overall approach?
I think content. I think the market wants to be reassured that there is a tax reform plan, that there is a infrastructure and deregulation approach, and that like all that to be packaged in an interaction with the rest of the world that is fair but still free trade and not protectionism.
Mohamed, on the latter, on the middle one, timeline. Some doubts around this table today from congressmen and from officials down in DC who have spoken to us about the timeline, the idea that the Treasury Secretary can get a tax plan enacted by August. If it is delayed through to the start of, say, 2018, how much disappointment will there be? How much fallout will there be, given where things are priced currently?
I think there will be some disappointment. I think the market is looking for movement quickly. The market is looking for structural growth engines to help cyclical growth engines. So to the extent that we don't get anything on the structural side, I think markets will be somewhat disappointed.
How much have markets actually priced in? I mean, to think we're going to get a President Trump who's going to come in tonight and give us very specific actions in terms of economic growth and tax plan is, quite frankly, foolish. We're not going to get that. I don't know anyone who thinks we're going to get that. So what's the downside potential tomorrow morning?
So you said very specific. I don't think we get very specific. I think we get more specific. If we don't get more specific, and if the tone is not pro-growth, then there would be downside. Don't forget that there's a lot of other things going on in the global economy. There's political risk in Europe that we cannot ignore. So that's why you need an anchor, and the anchor is the pro-growth policy momentums, and that's what the market has bought into.
Well, Mohamed, the equity market, yes. The bond market, it seems, no. We seem anchored with a 230-something handle over the last week or so. We kissed the 260s back in the middle of December, and then we rolled over. What has changed in terms of the enthusiasm that took us to the middle of December with break-evens popping, tips popping, and then you saw what happened with yields as well? What's happened since then?
One word, Europe. I think we've had enormous influence on the U.S. bond market coming from Europe. And there has been concern about political risk. Look at the 2-year German government bond. It's at minus 90 basis points today. Why? Not because of economics. In fact, Europe has a brighter outlook. It's about political risk. So we've been heavily influenced by what has happened in Europe.
So are we in a scenario here where we could come in tomorrow and we get markets higher, we have dollar lower, and we wind up having yields on the off foot down a little bit because of those risks? Is that the scenario we could be setting up for?
Yeah, we're looking at many scenarios, and I think the big question, and I love the way John called it earlier, the presidential put, is so far we've had a central bank put, and markets like and understand the central bank put. Why? Because central bank is relatively autonomous when it comes to policies. If we indeed shift to a presidential put, that's very different. President Trump needs Congress. So politics becomes more important. So look at how the market is going to weigh the presidential put, as John puts it, versus the comfort with the central bank put.
But Mohamed, talk about that put, because there are two ways you can do it. One is really big and brash and bold, which is complicated and difficult to get through. The other is more pragmatic and more modest. Which Donald Trump are we likely to see tonight?
So I don't know, but I think in a way the markets would rather have the latter, David, which is confidence that this is a process, not a one-off thing. This is a process that we will work on first, taxes, infrastructure, deregulation, and then let's not forget labor market reform. Let's not forget education. There's lots of issues holding back productivity. So I think the market would like to see a gradual approach as opposed to a big bang.
That would be wonderful. That's not the approach that Donald Trump took as a candidate. It was not a gradual approach. Can he satisfy the markets on the one hand and his base on the other at the same time?
And that is a political call. I mean, remember, he has to work with a Congress that would rather have a gradual approach than a big bang. And the problem with big bangs is that they're very hard to design. Normally, big bangs happen in crisis mode. But when you're not in a crisis mode, and we're not in a crisis mode, it's actually very difficult to get the political will. That's assuming that you can design it. So it's hard, David. It's a hard requirement to have the big bang.
Mohamed, just a very quick question. There used to be a time when we'd assume that President Draghi would leave the news conference at Frankfurt, Germany at the ECB and check where the euro was trading. Does the President leave the address to Congress a little bit later and check out where futures are?
Yeah, I think he will. I think he'll want validation of what he just said, whatever he says in the evening. So he will check on futures. He will see how it's absorbed tomorrow. And I think it's important because he said it yesterday. He's looking for higher growth to help solve other issues as well. So higher growth, healthier markets are things that he's hoping for, and I would argue he needs if he is going to get his approach to be effective.